Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. The recent move higher originated from the drop made in the changeover gap at the end of January. It started from where the optimized February 2021 to date uptrend, currently at 664.25, and the rising long moving average, currently 691.5 combined. Prices utilized these two supports as a base for the move higher, slowly filling in the gap and leaving a smaller one behind in between 710 and 718 even. The next event was a combined bearish dark cloud cover pattern and bearish double made in the middle of March. On its own, it was not that significant, but it did allow the creation of an upper trend line, currently at 923 even, for a smaller ascending narrowing wedge pattern. The lower trend line for this pattern was created just after, and it's currently at 895.5. The upper trend line is a multiple pointer, whilst the lower trend line was only a 2-pointer. 2 weeks ago, with the changeover, prices gapped down below the lower trend line, allowed for some targets to be drawn on the downside. A primary target X would be in the 956.5 area, which is a big ask on the downside, even given the recent action. However, there have been, as I've repeatedly said since my annual review on Paris rapeseed, made at the very start of January this year, some big patterns in operation here, and a big ask may well be in order. Thus, and I quote from the start of 2022, this leads to my final point since May last year, that is May 2021. We have formed a newer, much more acute bull channel, currently 664.25 to 862.75. To me, it is super acute and thus unsustainable, but it is there, and I will not dismiss it just because of acuteness. End of quote. Well, what I initially saw as a super acute bull channel is still there, and I have transferred it and finessed it on this daily chart such that I see it more as the February/April 2021 to date larger ascending broadening wedge pattern rather than a bull channel. This pattern is the outlying, corralling, bullish influence on this market, has been showing the way higher. However, we did not have a move up and over the upper trend line during April, even trading a full week above. We did have a move up and over the upper trend line during April, even trading a full week above and outside it. However, and this is more important, this is a monthly pattern, and though we have had a monthly close for April above and outside it, yet due to its relative size and action outside the ascending broadening wedge pattern, I've been inclined to look for further confirmation of this bullish intent, which so far in May has not been forthcoming. You see, though we have had a push up over the upper time, the market has not sustained this move higher, and we are on the verge of making a very, very significant pattern and possible move this week. You see, we are set to possibly make a weekly key reversal down this week. If we close tomorrow night, that's Friday, between 282 and below 282.25, then we'd be on. If we close tomorrow night over 857.5, then we'll be on for a weekly key reversal up. Anything in between, and would have the lesser outside week. The drop this week is now testing the second support zone, the rising short medium moving average, currently 810 even. We've already punched through the first support zone, the early May congestion, roughly between 830 to 840. Below we have some light Fibonacci support at 780 even, and then little until target X. However, please be aware, sneaking up from below is the medium moving average, currently at 748 even. And that's just above the 50% Fibonacci line for 2022 at 745.5. Winnipeg canola. The market had for most of February, March and April been travelling higher within the mid-January to late February bullish Andrews pitchfork in a very satisfactory manner, mainly using the middle time to indicate the bullish angle of attack, thus making a new all-time high in late April. However, this new all-time high was made at a price, as the market constructed at its peak a 3-day bearish evening star pattern based around the 100% projected Fibonacci line at 1193.10. This caused the dramatic drop at the start of the following week, punching down through and closing below the lower time, and thus rendering its retirement after this commentary. Prices even punched down through the 50% projected Fibonacci line at 1142.90, closing below it, but at that time not sustaining the move lower. However, the pitchfork was not sustainable. I had expressed as much recently, as this bullish pitchfork is quite acute, causing concerns about its sustainability. The big question mark over it has been answered, as prices gapped lower after changeover this past weekend, well below the 50% projected Fibonacci line, 1142.90, as well as the slowly rising medium moving average, currently 1076.80. We are now in a fairly free territory below until the wide band of congestion between October 2021 and February 2022, and that's between 942.5 to 1030 even. It is not an easily defined area, and it has different strata of support and resistance. Perhaps the most immediately recognizable is the rising long moving average, currently at 1003 even. It'll be interesting to see if prices do indeed reach down towards the long moving average or not. Bursa Malaysia crude palm oil. This is a September to December 2021 bullish Andrews pitchfork had until the end of February been the most recent driver in moving the market higher. It had nevertheless been breached, if not completely broken, over late February and early March, when prices broke above the upper time, currently at 80.35. However, despite some apparent consolidation at the 50% projected Fibonacci line at 74.92, what we really saw was the market stalling ahead of the 100% projected Fibonacci line at 81.96, before dipping back down into the depths of the same broken pitchfork. Despite a couple of gaps on the way down, the fall was limited by a combination of significant late February highs between 67.81 and 67.90, and more importantly the lower time, currently 64.57 of the previously mentioned broken Andrews pitchfork. All this generated a more sedate, fresh move higher in between the lower time and the middle time, currently at 72.46, until 3 weeks ago, when the market tried higher once again up towards the upper time. However, prices this time barely made it over the 50% projected Fibonacci line at 74.92 before collapsing down through the middle time, and also the key support at 67.90, and most recently having a changeover gap that slotted prices under the lower time, currently 64.57. We've now gone as low as testing the rising medium moving average, currently 61.13, the first time we have done that since December 2021. Now, that test down in December 2021 was not that successful, as prices made a swift turn around back up and rallied to the highs. So it's worthwhile keeping a close eye on the market just in case it may repeat the effort. You see, as I said last time, and I quote, "Overall of this, please remember that we still have the bullish Andrews pitchfork still controlling the market. Unless this is broken, I mean properly broken on the downside, then this pitchfork will still show the bullish incentive, which is still endemic in this market." End of quote. Well, we are going now to find out just how strong a hold on the market this pitchfork has. Because if we are still below it next week, then I will retire the pitchfork, and as a result, the bullish incentive. So, just in case, below the medium moving average, we next have a congestion area down between 56.42 to up to 57.10, which contains the 50% Fibonacci line, the January 2021 to March 2022 move at 56.42. This area is important, as just below it is the slowly rising long moving average, currently 54.46. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.